It lasted only 18 hours. 18 hours that stood between the American economy and total collapse. March 15, 2020, 5 p.m. EST. Jerome Powell sat alone in his office at the Federal Reserve, staring at screens that showed the financial world burning in real time. The Dow Jones had just suffered its worst single-day point drop in history. But that wasn't the worst part. The worst part was the Treasury market. US Treasury bonds, the safest investment on planet Earth, the bedrock of the global financial system, were breaking, not bending, actually breaking. Treasury yields were spiking violently when they should have been falling. The invisible plumbing of global finance was seizing up. If the Treasury market broke, everything else would follow. Every mortgage, every corporate bond, every pension fund, every 401k, everything. Powell's phone had been ringing for 72 hours straight. Bank CEOs, hedge fund managers, foreign central bankers, all saying the same thing: we need help, now. 3 days earlier, the Fed had injected $1.5 trillion into the system. Markets rallied for 31 minutes before resuming their freefall. Conventional measures weren't working. Powell looked at his watch, 5:27 p.m. In 12 hours, Asian markets would open. If they opened to chaos, the panic would go global. By Monday morning, the damage could be irreversible. He picked up his phone. "We're doing this tonight," he said. "Emergency FOMC meeting, now." What happened next would either save the American economy or destroy the Federal Reserve's credibility forever. The emergency meeting. Sunday, March 15th, 2020. Federal Reserve officials gathered virtually, scattered across America as COVID-19 spread. They knew this wasn't normal. Powell didn't waste time. "We have 12 hours to prevent complete market meltdown. The Treasury market is dysfunctional. If we don't act tonight, Monday morning will make 2008 look like a practice run." Silence. "I'm recommending we cut rates to zero, or not $500 billion. Unlimited. We buy whatever it takes." Loretta Mester spoke first. "Jerome, we just cut rates 2 weeks ago. We've never gone to zero except in 2008. Are we sure?" "I'm sure." Powell cut her off, sharper than usual. "The Treasury market is breaking. We don't have the luxury of waiting." Richard Clarida, the Fed Vice Chairman. "What about Trump? He's been demanding rate cuts for months. This will look like we're bending to political pressure." Powell's jaw tightened. Trump had called him clueless, the biggest threat to the economy, openly discussing whether he could fire him. "I don't care what Trump says," Powell replied coldly. "This isn't about politics. This is about preventing complete economic collapse. We're the only institution that can create unlimited dollars, and right now the world is screaming for dollars." The discussion continued for an hour, but the decision had been made in the first 5 minutes. Powell had decided to go nuclear. At 7:23 p.m., the vote, rates to zero, unlimited QE, announced immediately, tonight, unanimous. Powell sat back and exhaled slowly. He had just committed the Federal Reserve to the most aggressive monetary policy action in its 107-year history. He was about to create trillions of dollars out of thin air, and he had no idea if it would work. The announcement, Sunday, March 15th, 2020, 8:47 p.m. EST. Bloomberg terminals exploded. Federal Reserve cuts rates to zero in emergency. Sunday announcement. Fed announces unlimited QE. Will buy at least $700 billion in securities. 3 seconds of stunned silence across global trading desks. Then chaos. Every major network broke into programming. Breaking news: Federal Reserve takes emergency action. Powell appeared on screen at 9 p.m. sharp. He looked exhausted. Tie loosened. This wasn't the polished Fed chairman Americans were used to. This was a man who'd been awake for 3 days straight, making decisions that would affect hundreds of millions of lives. "Good evening," Powell began, voice measured but firm. "The Federal Reserve has taken several extraordinary steps to support the American economy. Rates to zero. $700 billion in purchases to start, with no upper limit. Corporate bonds for the first time in Fed history." A Wall Street Journal reporter asked what everyone was thinking. "Chairman Powell, these actions are more aggressive than 2008. Is this situation worse?" Powell paused. This was the moment. "This situation is different from 2008. Then we had a financial crisis caused by problems in the financial system itself. This time, we have a strong financial system facing an external shock, a public health crisis forcing a sharp contraction in economic activity. These actions ensure that when this health crisis passes, the economy can recover as quickly and strongly as possible." Masterful. He acknowledged severity without causing panic. projected confidence while recognizing emergency. But privately, Powell knew the truth was more frightening. What Powell couldn't say. In the 72 hours before that announcement, Powell had received calls that would haunt him forever. A major bank CEO Friday afternoon, "Jerome, we can't make markets in treasuries anymore. Our dealers are refusing inventory. If this continues 48 hours, we'll have fails to deliver on treasury settlements. Treasury settlements might fail. That would be like discovering the foundation of a skyscraper was made of sand. A money market fund manager. We're seeing redemptions we can't meet. We might have to break the buck." Money market funds are where millions of Americans park cash, assuming it's safe. If they started breaking the buck, people would realize their cash wasn't safe. That triggers runs, and runs kill financial systems. The New York Fed's markets desk. The repo market is freezing up. Repo rates spiking to 10%. If the repo market seizes up, the entire shadow banking system goes down. Each call was a crisis. Together they were a 5-alarm fire in the engine room of global capitalism. Powell couldn't fight fires one at a time. He needed to flood the entire system with liquidity, signal that the Federal Reserve, the only institution that could create unlimited dollars, was prepared to do exactly that. Hence the nuclear option, zero rates and unlimited QE, announced on a Sunday night. Did it work? Monday, March 16, 2020, 9:30 a.m. EST. The opening bell rang. Within seconds, the answer was clear. No, not immediately. The Dow plunged 2,997 points, nearly 13%, the worst single-day point drop in history. S&P 500 fell 12%. Carnage. Powell watched from his office, face betraying no emotion as staff exchanged worried glances. He'd expected this. Monetary policy doesn't work instantly, but markets don't care about. It takes time. CNBC's Jim Cramer, shaken on live TV. The Fed threw everything they had, and the market doesn't care. What happens when you've already gone to zero, and it's not enough? Peter Schiff, Powell just showed the world the Fed is panicking. Going to zero on Sunday night? That's desperation. But Powell wasn't watching CNBC. He was watching the Treasury market, because that's what mattered. And slowly, agonizingly slowly, something was changing. Treasury yields were calming, bid-ask spreads narrowing, dealers making markets again. The New York Fed had purchased $37 billion in treasuries by noon Monday. By Tuesday, something remarkable. Treasury markets were functioning again. Not perfectly, but functioning. The existential threat was over. The stock market, still falling. But markets fall during recessions. That's normal. What's catastrophic is when the basic plumbing breaks. And Powell had fixed the plumbing. Most Americans never knew how close they came. They saw the crash and blamed the virus. They didn't see the invisible machinery grinding to halt. Didn't understand that their 401ks crashing was bad. But the alternative, being unable to access their money at all, would have been apocalyptic. Jerome Powell prevented that. In one 18-hour period working through a Sunday night, he stopped COVID recession from becoming COVID depression too. But the cost, the inflation, the asset bubbles, the political fights would haunt him for years. The political firestorm. The reaction split perfectly down ideological lines. Wall Street, relief. BlackRock CEO Larry Fink. The Fed has done what needed to be done. Main Street, confusion. Regular Americans saw abstract Fed actions while worried about rent, jobs, getting sick. Senator Elizabeth Warren. The Federal Reserve's actions show the severity of this crisis. But monetary policy alone cannot solve this. We need massive fiscal relief for working families, not just liquidity for financial markets. She wasn't wrong. Powell knew it. But the most interesting reaction came from President Trump. 10:17 p.m. Sunday night, Trump tweeted, "Jerome Powell and the Federal Reserve have finally done what they should have done a year ago. Too late, but better than nothing. We need more stimulus now." Vintage Trump, claiming credit while criticizing. Powell, reading the tweet, allowed himself a small bitter smile. But Trump's "we need more stimulus now" worried Powell. Every dollar the government spent would have to be borrowed, and who would buy those bonds? The Federal Reserve. Powell had just signed up to finance the largest peacetime deficit in American history. Emergency measures are easy to start, incredibly hard to stop. The aftermath. By April, immediate crisis was over, markets stabilized, credit flowing. The Fed had expanded its balance sheet by $2 trillion in 4 weeks, fastest in history. But the real economy was in freefall. Unemployment claims hit 6.9 million in 1 week, 10 times the previous record. Powell testified before Congress virtually. Senator Bernie Sanders attacked. Chairman Powell, the Fed has committed trillions to support financial markets and corporations. What are you doing for working families who can't pay rent? Powell responded carefully. Senator, the Fed has lending powers, not spending powers. We can provide liquidity to markets, but we cannot send checks to families. That's fiscal policy, Congress's job. What we can do is keep credit flowing, ensure that when the economy reopens, the financial system can support that recovery. Sanders pressed, your policies inflate asset prices. That benefits wealthy people. Working families don't own corporate bonds. You're making inequality worse. Powell's expression tightened. Sanders wasn't entirely wrong. Senator, I understand your concern. Monetary policy works partly through asset prices. But the people who benefit most from a strong economy are working families. When unemployment is low, wages go up. The worst thing for working families would be a depression. That's what we were preventing. Solid answer. But the uncomfortable truth, Fed policy did disproportionately benefit asset owners short term. But the alternative, doing nothing, would have hurt working families even more. This was the central tension. Everything the Fed did to prevent catastrophe also made some people much richer and raised uncomfortable questions about inequality. The critics. As panic faded, criticism intensified from all directions. Right. Republican Senator Pat Toomey. The Fed has gone beyond lender of last resort. They're lending to municipalities, corporations, medium businesses. This is fiscal policy, not monetary policy. Fiscal policy should be determined by elected representatives, not unelected Fed officials. Fair constitutional point. Was the Fed overstepping? What did it mean for democratic accountability? Left. AOC. The Fed moved heaven and earth to save Wall Street. Unlimited QE, corporate bonds, money market funds. But when it comes to student loan borrowers, people who can't pay rent, where's that energy? Again, merit. The Fed's tools were blunt. They couldn't target with precision. But the most dangerous criticism, economists warning unlimited money printing would cause massive inflation. Larry Summers, May 2020. The Fed and Congress have unleashed unprecedented stimulus. Appropriate given the crisis. But we must be careful. If we pump too much money into an economy that can't produce enough goods, we risk significant inflation down the road. Powell read it carefully. Summers was right to worry. But Powell was more worried about immediate deflation and depression than theoretical future inflation. We'll cross that bridge when we come to it. He told staff, right now, we need to make sure there's still an economy left. It would be one of the biggest mistakes of his career. The 2021 reappointment. Fast forward to November 20. Biden faced a consequential decision. Reappoint Powell? Case against. Progressives said he'd been too easy on banks, rolled back regulations. Elizabeth Warren led the charge, declaring she'd oppose reappointment. Bernie Sanders was skeptical. Case 4. He'd prevented a financial crisis, had market respect, was a known quantity during uncertainty. Firing a Fed chair for non-performance reasons would be unprecedented, potentially damaging to Fed independence. Janet Yellen, now Treasury Secretary, reportedly advocated strongly for Powell. November 2020-2021, Biden announced Powell would be reappointed. Chair Powell has provided steady leadership during an incredibly challenging period. He has my confidence. Warren's statement, I respectfully disagree with the president's decision. Powell had survived, barely. But the biggest test was ahead, because by late 2021, inflation was accelerating, and all those 2020 warnings about too much stimulus about to come true spectacularly. The mistake, throughout 2021 as inflation rose, Powell and the Fed called it transitory, temporary supply chain disruptions that would resolve. They were wrong. Spectacularly wrong. By early 2022, inflation hit 7%, then 8%, then 9%, levels not seen since the 1980s. Political backlash was fierce. Economic pain was real. Powell would have to reverse course completely, raising rates at the fastest pace in decades. But that's a different story, one we'll tell in future episodes. For now, understand this. When Powell made those March 15, 2020 decisions, zero rates, unlimited QE, he was making a bet that preventing a depression was worth the potential cost of future inflation. Was he right? It's complicated. One hand, the US avoided depression. GDP recovered faster than after 2008. Unemployment fell quicker than predicted. Financial system stayed stable. By those metrics, Powell's intervention was massive success. Other hand, the inflation that followed caused real pain for millions. Grocery prices soared. Gas hit record highs. Rent became unaffordable. Fed's credibility was damaged. Powell spent 2022-2023 cleaning up a mess his 2020 policies helped create. So was March 15, 2020, the night Powell saved America. Or the night he mortgaged America's future for an immediate crisis? The answer depends on perspective, and maybe we won't know for another decade. The human cost. Lost in talk of trillions and basis points, real people's lives were changed. Sarah Chen, small business owner in Seattle. I don't fully understand what the Federal Reserve does, but I got a PPP loan in April 2020 that kept my restaurant open. Maybe indirectly, Jerome Powell saved my business. Marcus Thompson, recent college grad. I got laid off 3 weeks into my first job. By the time I looked for work again, everything cost way more. My rent went up 40%. Gas from $2.5. They're telling me this is because the Fed printed too much money. How does that help me? Both perspectives are valid. Both are true. That's what makes evaluating Powell's decision so difficult. For every person whose job was saved, there's another whose savings were eroded by inflation. For every small business that got a loan, there's a renter priced out of their neighborhood. For every 401k that recovered, there's a young person who can't afford a house because Fed policies drove up asset prices. Economic policy always creates winners and losers, but the scale of Fed intervention in March 2020 created winners and losers on historic scale. Epilogue. Legacy in the balance. December 2024. Jerome Powell is still Fed chairman. Middle of his second term expires May 2026. His legacy is still being written. History's judgment depends on what happens next. If the 2021-2023 inflation proves temporary and successfully controlled, Powell will be remembered as the man who saved America from both depression and runaway inflation, a hero who navigated the worst dual crisis since the 1970s. If inflation proves more persistent, or if rate hikes cause severe recession, or if long-term consequences of balance sheet expansion are worse than anticipated, Powell's legacy will be more complicated and hovering over everything. What happens if Trump wins 2024? Trump has made clear he's not happy with Powell. He's suggested he might fire him or refuse to reappoint him in 2026. Whether a president can fire a Fed chair for policy disagreements has never been tested in court. If Trump wins and tries to remove Powell, it would trigger a constitutional crisis that could fundamentally alter the Federal Reserve's independence. That independence, the ability to make unpopular decisions without political interference, is what allowed Powell to act so decisively on March 15th. So when we ask whether Powell saved America that night, we're really asking a deeper question. Is central bank independence worth preserving? Should unelected technocrats have the power to create trillions and reshape the economy? Or should elected officials who are accountable to voters make those decisions? There's no easy answer, but here's what we know. On March 15, 2020, the American economy was hours from catastrophic collapse. Treasury markets were seizing up, credit was freezing, panic was spreading, and one man, working through the night with advisors, made decisions that pulled the economy back from the brink. Whether those decisions were wise long-term is still debated, but short-term, they worked. The five-alarm fire was put out. The immediate crisis was contained. The financial system survived. That's not nothing. Jerome Powell may have made mistakes. He may have underestimated inflation. He may have kept policy too loose too long. But on that one crucial night in March 2020, when everything was on the line, he made the hard call. He went all in. He used every tool at his disposal, and he kept the lights on. In a crisis, sometimes that's all you can ask for.